Welcome back, everyone. This is our weekly oil report. My name is Angelo Zitis. This week's title is As the Wheel Follows the Ox. Now, the current circumstances surrounding the oil market are definitely some the world has not come across in the past, while other oil crises before had totally different aspects. Even though this report aims to discuss the current main oil drivers and concerns around the world, we would like to emphasize the dramatic beauty of the sector, as it tends to create great interest not only for traders and analysts, but also to the general public. Oil demand is the main concern for the industry at the moment. The epidemic outbreak has had a significant impact on oil demand around the world. The lockdown measures deployed by governments have been restricting overall oil consumption globally, as people do not move around like before. Furthermore, as oil is not being consumed, another issue has risen. Due to the fact that oil storage facilities are not emptying as they regularly do, or at least at the pace they are used to, available storage space is becoming scarcer. Producers are turning to alternative solutions to create space as they are pressured by abundant supply. Producers are now in search to book ships, rail cars, caverns, and pipelines to store fuel as more storage space is quickly running out. Even oil tankers are being used to store barrels of jet fuel, gasoline, and diesel at sea, acting as floating storage instead of the means of transportation. According to shipping data, vessels used as storage are nearing a fully booked status, while floating storage tends to cost more compared to onshore storing and is considered a more complex solution. Also, information from the US indicates oil traders are turning to more unusual tactics like rail cars or unused pipelines, while in Europe, some refining and storage hubs that maintained free space in the past days are now considered booked. Finally, and as a consequence, Saudi Arabia is exploring rerouting its oil tankers currently heading to the United States, as rumors intensify that the US government is planning to block incoming vessels from the kingdom. However, with free storage space running out, the impact on the oil market goes even deeper, as various fronts are affected just like the cart follows the horse. On Monday, US crude oil futures collapsed below zero, reaching the staggering minus $37.63 a barrel, as traders returned money to anyone in demand for oil. This is the first time in history a situation like this appears in the oil market, while this is also the first time a coronavirus epidemic puts most of the planet under lockdown. A drop across all oil price instruments was seen in the past days, and we do not know for sure to what extent it will affect the global economy. However, we do know for sure that some US shale oil producers are at the moment facing bankruptcy as they struggle over a mounting debt with no cash for repayment. Even though the idea that the US government will step in to fund these companies with a loan type of cash injection, the industry is currently facing an increasing loss. It is estimated that 30 independent US oil producers need more liquidity, and this will force them to either restructure existing debt or revise their options. On a separate note, the OPEC Plus group next moves are also among analysts and traders' radar, as most believe they will also be forced to react to the latest obstacles the industry is facing. The most probable scenario is that they could follow up on further production cuts. The news today gave a boost to oil price, yet nothing has been confirmed at the moment. As a conclusion, many reports have surfaced in the past days noting various investigations are taking place around the world on inside information trading. According to Bloomberg, the US Commodity Futures Trading Commission and other bodies like the UK's FCA are currently investigating traders that possibly used leaked information from the OPEC Plus latest meeting. Could they have pushed oil prices even lower, or have they hedged and profited off illegal activities? These are questions that need to be answered. Moving now to our technical analysis, this is WTI cash 1 hour chart. Now, in a selling momentum, we have noted three levels. That's the S1 1520, the S2 1280, and the S3 1085, which is the lowest level reached all time for the specific instrument. However, if an upward correction is to take place in the next sessions, first the commodity should break above the R1 1790 tested today in the morning European session, but was not breached. If the commodity moves higher, it could come across the R2 2160 line, which WTI used as support level from the 20th to the 21st of April. Even higher, the bulls could aim for the R3 2160 level, which could also become a target as it was last seen on the 17th of April. Even though WTI is in a selling momentum and it would take a big move to change this outlook, the commodity has moved higher since Tuesday, the 21st of April, and this is evident on our RSI indicator below our chart, which is currently running through the 59 level. If you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time and enjoy solid trading.